Welcome back to Debits and Credits with Haas and Dawe, and today's episode is going to be about FIRPTA. Now that may sound like I'm stumbling over my tongue, but FIRPTA really that's for what's known as the Foreign Investment in Real Property Tax Act, 1980. And what's fascinating about this is that it didn't take effect until 1984, but it was passed in 1980. I guess to give people 4 years to get used to it. Well, what's also interesting is now here we are now in 2026. So we're talking about 46 years later, and people still can't get it right. So it's interesting as to why we want to talk about this and how to help people get through the process of what FIRPT is all about. Now, this Foreign Investment in Real Property Tax Act has to do with a foreign seller, meaning it's someone who is not a citizen of the United States and is not a resident of the United States. They have to fail both tests, so to speak. So if someone is a resident alien, but they're a non-resident, but they're still a citizen of the United States, then they don't fall under this law. So the seller has to be a non-citizen and a non-resident. Now, a non-resident has to do with if they have any type of a green card, a visa, any type of permission to live in the country or to work in the country, then that makes them a resident of the country, and this wouldn't apply. So the purpose of the act was to be able to collect tax on the sale of real estate by foreign investors and making sure that the tax was paid and not just waiting to or relying on the fact that these foreign investors, these foreign sellers would report the tax after the sale happened and so on. So it's a withholding. It's a withholding tax, no different than all of us have withholdings done from our paychecks. It's a situation where when the sale happens, the escrow company or the title company, the settlement agent, will withhold money from the seller's proceeds and have it paid in to the Internal Revenue Service, the IRS, for this as a as this person's portion of capital gains tax on that sale. The law started as a 10% rate, but it has now been raised to 15% with a couple exceptions, and so it's 15% of the sales price, not of the proceeds, but of the sales price that's going to go on with to the IRS of what comes out of the sale of the property. Now, what's unique about this law, though, and makes it a little bit cumbersome, we'll say, or confusing, or scary, depending on perspective, is that it's actually the buyer's responsibility for the withholding. It's the buyer's responsibility to make sure the tax is withheld. It's the buyer's responsibility to make sure the paperwork is sent in to the IRS. Now, that's not practical because the buyer doesn't have access to the money. It's with the escrow company or the title company. The buyer doesn't have access necessarily to all the documents and so on. But why the law was written this way is when you get to the eastern part of this country, well, I'll say east of the Rockies, most closings of real estate transactions are not done by escrow companies or title companies. They're done by attorneys. They're done at these situations called table closings. And you just have to picture a big conference room table where you have a buyer sitting, a seller sitting, people from the title company are sitting, people from the real estate agencies are sitting, and also attorneys are sitting. And the attorneys are the ones who are handling the transaction. And so they call it a table closing because everybody comes to the table. And then the seller brings the deed and the buyer brings the money. And the government figured, well, the buyer, you're bringing the money, take 15% of that money and give it to us before you give the rest of it to the seller. And that's why they've made this a buyer responsibility proposition, which is frustrating in California because of the fact that, again, the buyer does not have really the full access to be able to do what needs to be done. Now, what also enters into this when you have foreign sellers is the whole concept of a tax identification number. Now, it's very possible that the seller has a social security number because at one point they worked in the country, and that's why they own property here. But since then, they had moved back to their home country, and they haven't worked here for a long time. But they may still have a social security number, or they may have what's known as an ITIN, an individual taxpayer identification number. And so what the process is this individual taxpayer identification number, known as an ITIN, is something they have to apply for, and it's used only for the purposes of filing a tax return to report the sale of the property. And so what's happening is they'll fill out another form called a W-7, which has to get sent into the IRS to try and get an ITIN. The downside of this, with coming up with all of this, is it takes time. It used to be that ITINs were issued in 2 weeks. Now they're issued in 7 months if you're lucky, which means it makes it difficult for the foreign seller to get the refund if they have a refund back, or to report the transaction because they don't have a number to put on a tax return. The forms that are being used is an 8288 form. That's the government form. And accompanying it is an 8288-A form. And so what happens is a package has to be done by the escrow company, the title company of this transaction. So normally there's a closing statement that shows the sales price and shows all the money that went out to pay off loans and for the expenses for real estate commissions and proceeds and so on. But then another form that has to be done, it's a government form. It's an 8288. We call it the 8288 because it just sort of has a rhythm to it with IRS forms read off. And so the buyer is showing as the responsible party. The buyer is showing as the withholding agent. And it'll be the buyer's name and address, social security number, the property address, what the sales price is, when escrow closed, and how many foreign sellers there are. But what's interesting on this 8288, the seller doesn't show up anywhere on the form, nowhere. And so that's why it's totally a buyer's form. Now there's an accompanying form called an 8288-A. It looks like a 1099. It's about a third of the size of an 8.5 by 11 piece of paper. Now on this form, it has the seller's information. It'll still have the buyer's information as a withholding agent. It has the seller's information of name and address. If they have a tax ID number, it'll go on there. And it'll show how much the sales price was and how much the withholding was. And what's going on is, what happens, why this is important, is that once the IRS gets the money and gets the 8288 form, then they'll send the seller a copy of the 8288-A form. And that's giving the seller permission to file a tax return, and will give them permission to claim the withholding as a credit. Now, the withholding amount, like we talked about, is 15%, but there's some exceptions. If the sales price of this transaction is less than $300,000, and the buyer's going to live in that property as a residence. It doesn't have to be a primary residence, but as a residence, then there's no withholding at all, and it's a free pass to the seller. If the sales price is between $300,000 and $1 million, the withholding rate's only 10%. But anything above $1 million, the withholding rate is 15%. And there's another possible exception item, not likely in today's world, but possible. The seller can file a waiver request. I mean, they can send an application in to the IRS as long as it's gets sent in before the date of closing, saying I'm selling the property at a loss, or I'm doing a 1031 exchange, or my gain's only going to be $100, so that the 15% is not a realistic number. And the IRS can look at the facts and evaluate the information they're given, and they can agree. They can say, okay, we agree with you. There's no withholding on this transaction. Or you only have to withhold 5% of the transaction, and they'll send it back. The downside of this waiver request, while it says in the Internal Revenue Code that the IRS has to opine within 90 days of receiving the application, it's been taking them 9 to 12 months to approve it. So at that point, the waiver request becomes almost meaningless. And the seller's going to be better off, and the escrow company is going to be better off just withholding the money and sending it into the government, so then the seller can claim a refund a lot faster than waiting for the waiver request to be done. Now, if you have multiple sellers, you have to evaluate if one's a foreign, one's not a foreign, if they're both foreign, because then the transaction gets split between your foreign person and your non-foreign person. So let's say the sales price is $500,000, and you have two sellers, and one's foreign and one's not. Well, for the purposes of FIRPTA, it's $250,000 per seller. And if the buyer's going to be occupying the property as a residence, that seller's portion, who is a foreign person, is less than $300,000, and they would get out of the withholding. So you can see there are different ways that this has to be taken into consideration. Now, one thing else that starts creating problems we have to be concerned about is the timing. Escrow closes today, the escrow company has to send it in to the IRS within 20 days. And if it doesn't get postmarked to the IRS within 20 days, then it's going to be late. That can be a problem. The other thing that we tell the escrow companies and the title company they need to do when they're writing the check to the government, on the check itself, you would think, well, you're going to put the seller's information on there so they get the credit for it. Well, that's not how it works because the check ties to the 8288, the form. And the form is a buyer's form. And the buyer's name's on that form. And so on the check to the government, it's going to have the buyer's name and the buyer's social security number on there, or the buyer's tax ID number on there, so that it ties to the 8288 and the IRS can connect the dots and give credit to the form and to the money. And then they'll move the money over to the seller's information that's on the 8288-A form. And so all this needs to be done within 20 days of close of escrow. And then the question is, what if it goes wrong? What if it doesn't get sent in on time? Let's say the seller didn't cooperate. Let's say the buyer didn't get the form back. Let's say something got goofed up and escrow forgot to send in the money. Let's say they were waiting for a waiver request. All these different types of circumstances, and all of a sudden the form and the money gets sent in later than 20 days from close of escrow. Well, what can go wrong is that the buyer is then going to get a penalty notice. And the buyer, because the buyer is a responsible party. Now, you could say that a lot of times when we write letters on behalf of clients for penalty abatement, we're going to say, well, it's the first time it happened, it won't happen again. Or we're going to say reasonable cause. They didn't have access to the form or to the money. And the government's position, though, on FIRPTA with the Form 8288, it's based on an event. And the buyer should know that the buyer is the withholding agent, and it's the buyer's responsibility to get it sent in on time. So they're not very forgiving about the penalty abatement. But when we go to appeals and we talk to people higher up, we are able to get some penalty abatement to happen. So there are solutions to it. Depends on the circumstances of whose fault it is, what happened, how to get sent in late, did it get to the wrong place, and so on. So these are ways that we can address if something goes wrong, how to fix it. If you can't get information from the seller, if the seller's information isn't accurate, if the buyer's not cooperating, whatever it is, we can find ways to fix and help fix a FIRPTA situation. So this is something that affects escrow and title. If they've got a foreign seller, the non-citizen and the non-resident, then they have to do withholding. And the agents have to know about it. And even though it gets frustrating because at times escrow doesn't find out until within a couple of days before date of closing that the seller's foreign. And then the buyer's agent gets upset, and then the buyer's panicking. So there are ways we work with all our title company and escrow company clients and people from the various trade organizations, the California Escrow Association, Escrow Institute of California, American Escrow Association, to help them get through some of these situations where they can't necessarily figure out how to get out of a sticky situation, whether it be waiting for a waiver request, getting the withholding certificate letter back, getting the form filled out right, getting everybody on the same page, and getting it to be done calmly so it's done okay and done on time. We can help with that. So this is FIRPTA. It's something that gets in the way sometimes. It's something that can be handled, and obviously it's on every transaction. It is certainly out there. And just as sort of an ironic little story that in talking to not one, not two, but three different appeals officers who handle these FIRPTA cases, they said to me that their first experience with FIRPTA was when they were a buyer in a real estate transaction and their seller was a foreign person. And they had no idea about FIRPTA until that happened. And so now that they're working with the IRS as an appeals officer on FIRPTA matters, they have a much greater knowledge of what goes on and makes it easier. So that's FIRPTA in a nutshell. Obviously, any questions, you can get a hold of us here at Haas and Dawe. We'll be glad to help you out with your situation. That's all for this session of the podcast. We'll be back with you soon with another session and another interesting part that goes on in the world of accounting at Haas and Dawe. Thank you and goodbye.